Hey guys, welcome back to Father and Son Investing. We're going to do just a quick update on OnTrak. It's been a little bit since I've done a video on them and somebody asked me if there was an update. So let's just talk about it. I'm not going to rehash everything that OnTrak does because I've done 2 other videos about them. Their customers are employees of large corporations such as Adobe and Berkshire Hathaway, and they are beneficiaries of health insurance companies. So they use AI to identify people who have untreated behavioral health as well as chronic conditions. The reasoning behind that is that if the untreated mental health problem gets better, the chronic condition will also improve. And that will save money for those large corporations and health insurance companies. These are just some of the customers that I'm talking about that OnTrak has. Now, does their business model work? It does. It shows that when patients get enrolled with OnTrak, that there's a 64% reduction in hospital admissions, as well as an $11,600 savings per member over 2 years. Now let's talk about the business end of OnTrak. They have fallen on hard times, both the company as well as their stock price. They have lost some major customers, which caused them to then have layoffs, as well as the severance packages that go with those layoffs in order to get their business under control, which they have done a good job, sad to say for those people who lost their job. With that restructuring, they've managed to get their finances under better control. Let's just take a quick peek at their improving financial results, as they call it. You know, they show 2017 to 2020. They don't show anything going on yet for 2021 on this slide, but you can see the tremendous growth that they had between 2019 and 2020, and along with that went that massive increase in their stock price. What they do show for 2021 is that their gross margin is getting better and their operating margin is improving. Let's just talk about their balance sheet and their capital structure, and then I want to talk about a silver lining in this OnTrak massive decrease in their stock price. When we look at their cash and assets, they've got plenty. They've got more than 200 million. Subtract out their liabilities, and we're still looking at 52 million in stockholders' equity. There's a little more than 19 million shares that are outstanding in their common stock. A little more than half of that is owned by the public, with the rest owned by insiders of the company. Now, I want to talk to you about the silver lining that I have found within OnTrak, and that is their preferred stock. We're going to go down to this bottom part of this table here. We'll see the preferred stock outstanding is almost 3.8 million shares. Now, what is this preferred stock? We're going to jump down here to this little paragraph here at the bottom, and we'll see that they issued non-convertible 9.5% Series A cumulative perpetual preferred stock. That is very key, the title of that. Cumulative means that the dividends that it earns are cumulative. Perpetual, that means that it goes on until these shares get liquidated by the company. Preferred shares means just that. They're preferred shares, so owners of those shares don't hold any voting rights. What is the non-convertible part? It just means that these shares can't be converted into common stock. Now, let me just give you the details of this preferred stock. I actually own a fair number of these shares. I've been buying them up because they're so cheap right now. 9.5%, that's based on a liquidation preference of $25 per share. So when these shares were originally sold, they were sold for, if I remember correctly, $24.50. That meant that they were only going to be able to appreciate up to $25. That is the liquidation price. Should the company want to get rid of these shares, they're going to have to pay any shareholder who holds it $25 per share. Now, that doesn't mean that the price can't go above $25. Certainly, there are companies out there who have preferred shares that sell for more than what the liquidation preference is. As you can see, the stock price here took a big plummet. You can see it went down from close to $25. They lost a customer, it went down, and then it has just been coming down in step with the OTRK shares of OnTrak. What has that done? Well, it has now made the dividend yield on this OTRKP 22.5%. 22.5% dividend. Now, what you need to know is that when they sold these preferred shares, they held back some of the money that they received in order to fund the dividend. So that dividend is pre-funded out into August of 2022. So what else do you need to know about these shares should you choose to purchase them? Well, the dividend dates for them are February 28th, May 30th, August 31st, and November 30th of each year. Again, it's 9.5% per annum based on a $25 per share liquidation preference. The other thing you need to know is that OnTrak can't redeem the Series A preferred shares until at least August 25 of 2025. Then at their option, they may redeem those shares at a redemption price of $25. That means if you buy these shares at $10.53 today, potentially in August of 2025, they're going to be worth $25. That is just about a 150% return over the next 3 years. Now, what's it going to take for these shares to get back to being worth $25? It's going to take OnTrak getting customers back so that they can improve their revenue and thus increase their stock price. Along that front, at least they are trying to hold their own here. They announced that they had signed a 3-year contract with the largest employer customer for expanded mental health and well-being services. So at least they're not losing a customer here. They're going to be able to continue on and expand what they were previously providing for this customer. That does it for OnTrak today. Am I buying OTRK? I'm not, but I have been buying OTRKP. Why? Well, because of that massive dividend now, 22.5%, and the fact that should OnTrak improve their business over in 2025 and they want to redeem these shares, they're going to be worth $25 each. Now, a while back, I did a video about preferred shares. I would encourage you to go back and watch that. I showed a website where you can manipulate things to be able to see other companies whose preferred shares can be bought on the cheap like this. You've got to be careful, though, if you do. You need to look into the companies because there's reasons why some of them have such reduced prices in their preferred shares and thus these massive dividends. And some of them aren't actually paying dividends right now, although they might be cumulative. They're not being paid at the moment. They're just adding up. So I can tell you that in my case, this OnTrak perpetual 9.5%, here it is on my Vanguard statement from November, and you can see the dividend that they paid me. I've been buying more shares after the ex-div date because the price has just been so great. I hope this information was useful for you. If it was, share it with a young person in your life, please. Teach them about preferred shares. A lot of people don't understand them or have any interest in them, but you can see that there can be some silver linings. Until next time, enjoy your investing.